Hello everyone. This is the pre-market report video for today, 6th December 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Whatever happened yesterday, I personally think it's a clear tug of war between proprietary traders and FII. I mean, as we discussed multiple times, if the rally or the sell-off happens in the morning means then it belongs to proprietary traders, and if it happens in the afternoon means it's caused by FII. Please have a look at the Nifty chart. Didn't justify its yesterday's volatility. As most expected, it had some profit booking in the morning, so it dropped to below 24,300. Then around 12 o'clock, it rallied 350 points in just 15 minutes. This must be caused by proprietary traders, since based on the Wednesday open interest analysis, proprietary traders wants the market to go up. So I'm guessing they did the power play before FII come into the picture. Hence, FII don't even have to think about pushing the market down. Then comes the FII at 2 p.m. Initially retreated for a moment, then shorted the market heavily to push it down the Nifty by 250 points. But I'm guessing proprietary traders again supported the market and made it to close about 24,700. So I personally believe it's a pure tug of war between proprietary traders and FII. Anyway, that aside, around the same time 12 p.m. as the rally, Japan's largest investment bank Nomura released the statement that they are expecting today RBI will cut the interest rate by 25 basis points. If this Nomura statement was the reason for the today's initial rally means, then to some extent market already factored that 25 basis point rate cut. So we may not expect the huge movement after RBI rate cut announcement at 10 a.m. today. If the market didn't factor those means, then cutting the interest rate will make the Nifty to rally further. Again, if RBI didn't cut the interest rate, then things will be completely different. So please keep an eye out today for RBI's action, which is due at 10 o'clock. Then the RBI governor press conference will happen sometime between 10 to afternoon, where he will comment about economy, inflation and GDP data, etc. Hence, interest rate cut, CRR cut, GDP projection and inflation projection, any of that macro might define the market today. Then regarding the open interest volume analysis, in the index future market, FII increased the long position by massive 21% and reduced the short position by 4%. So their short position holding from 62%, it dropped to 56%. Hence, clearly FII did some level of short covering. Whereas proprietary traders reduced both long and short holdings. Thus, yesterday, even though there was no index future expiry, the total open interest decreased by 3%. Then coming to option derivative market, strongly FII wants the market to go down. At the same strength, proprietary traders wants the market to go up. Just for info, today is Sensex expiry, and because of this new SEBI rule, one index expiry per week per exchange, yesterday Sensex derivative trade volume skyrocketed by 5 to 7 times. About institution, in the cash market for the third day in a row, FII was net buyers. They net bought for massive 8,540 crore rupees. On the other hand, DI net sold for 2,300 crore rupees. Here, one more thing, in the option market, FII net bought for near massive 79,000 crore rupees index options. And based on my analysis, I think they bought massively put options. Honestly, I don't know why they keep on buying put options. Anyway, it is what it is. So these are the things I want to highlight about the Indian market. Now coming to US market, last night they had some profit booking before the big macro release tonight, which is nothing but unemployment rate, then government's report for number of jobs added in the November month. As we know, this is a make or break data. I mean, at present, market wants somewhat bad data, not extreme bad data, which could potentially increase the hopes of a Fed rate cut on December 18th to above 90% in the Fed rate monitoring tool. So last night, US market did the waiting game. Dow Jones decreased by 0.55%, S&P 500 down by 0.19% and Nasdaq marginally down by 0.19%. In case of VIX, it was flat 13.5. Despite US market profit booking, actually Indian ADR in line with Indian market, it rallied. All of them closed very positive, especially ICICI Bank ADR increased over 3%. So even arbitrage difference, ICICI Bank and Wipro got the positive of 1%. On the other hand, Reliance and Infosys having the arbitrage difference of flat to positive, and HDFC Bank alone having the difference of flat to negative. About Gift Nifty, today early morning it closed at 24,820, and as per yesterday Indian market close, at present the premium is 70 points, equating that to the spot. For now it's indicating gap up opening of 30 to 50 points. Then coming about oil, in the OPEC Plus meeting, they didn't announce any fresh production cut, rather they delayed the production increase by another 3 months. So oil price haven't changed much. At the time of this video, Brent crude closed at around $72 per barrel and WTI crude closed around $68.5 per barrel. As a summary, US market closed marginal negative. However, on the expectation of some positive announcement from RBI, both ADR and Gift Nifty indicating a positive opening. Regarding RBI meeting, it is expected to be eventful. Let's see. About the things to look out. First, early morning, there are lots and lots of Japanese data like household spending, foreign reserve, etc. Then during our market time at 10 a.m. as we discussed, RBI interest rate decision. Then at 12:30 p.m. Germany's industrial production growth and trade balance is due. And in the night for US, average hourly pay increase data, non-farm payroll addition data, and unemployment rate are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 70 points gap up and was very volatile as we discussed initially, but it managed to close above 24,700 mark, 240 points increase. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with a long lower shadow and a minor upper shadow with a continuation of higher high formation for the 4th day in a row, negated the higher low formation. Here, this long lower shadow indicating buying interest at lower level. Then, on the positive side, Nifty held above all key moving averages with RSI and MACD momentum indicators maintaining an upward bias. Then, in addition, Nifty hit the top line of the Bollinger Band with above average volume. Furthermore, the hourly momentum indicator has triggered a positive crossover from the equilibrium line, suggesting that the up move is likely to continue. Hence, in the near term, if Nifty holds 24,700, then it could move towards 24,900 to 25,000. However, if it falls below 24,500, will trigger the sell-off and it's the immediate support, followed by 24,350 as the next support. In case of Bank Nifty, it opened 90 points gap up and underperformed but had the similar movement like Nifty and closed at 53,600. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bullish candlestick pattern with a long lower shadow and a minor upper shadow. Here, unlike Nifty, Bank Nifty maintained both a higher high and higher low formation and traded at the upper end of the Bollinger Band on both daily and weekly chart. In addition, RSI and MACD momentum indicators maintained an upward bias. Hence, now Bank Nifty has to hold above 53,250 zone for an up move towards 54,000 and then 54,460. While on the downside, support is at 53,250 and then 53,000 level. On the options front, the maximum call option open test was at 25,000 strike, followed by 24,900 and 24,800, with maximum new call option writing at 24,750 strike, followed by 24,900 and 24,700. On the put side, the maximum open test was at 24,700 strike, followed by 24,000 and 24,500, with maximum new put option writing at 24,700 strike, followed by 24,750 and 24,800. Thus, from options data, Nifty is likely to face resistance in 24,800 to 25,000 zone, while support is at 24,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.